In the previous video, we learned about accounting equations and how the transaction affects the assets, liabilities, and owner equity. However, what happens to the revenue and expense accounts related to the statement of comprehensive income? Revenue is added to the cash balance as it is received in terms of cash. Revenue increases the net income of the business and hence it is added to the capital account. A company receives revenue during the normal course of operations such as sales, rent received, commission received, etc. Let's continue with our case. Daniel's Consulting Services. During the month of December, Daniel earned a total of $144,000 in revenue from clients. The total effect of these transactions is revenues increased by $144,000, which results in a $144,000 increase in owner's equity. Let's look for expenses. An expense involves the outflows of money, the use of other assets, or the incurring of a liability. These expenses reduce the net income. All these expenses are deducted from the capital account, which is reduced in equity as they reduce the income. In its normal course of expenses, operations such as payment of salary, rent, insurance premium, postage, wages, repairs, etc. Payment of these expenses reduces the cash. This way we can see that the accounting equation is always balanced. You can take the balances from the general ledger's asset accounts, liability accounts, and the owner's equity accounts and apply them to the equation. In the equation, the accounts must balance. Let's take a few transactions and see how these accounts are affected. In December, Daniel's Consulting Services paid $32,000 in salaries for the accounting clerk and office manager, Danish. This transaction is expenses increased $32,000, which decrease in owner's equity and decrease in assets of cash in bank $32,000. Next, Daniel's Consulting Services issued a check for $2,600 to pay the utilities bill. This transaction also increases expenses, which decrease in owner's equity by $2,600 and decreases in assets of cash in the bank. As a conclusion, all transactions will affect the business's assets, liabilities, and the owner's equity accounts. The accounting equation is applied to check that these three accounts balance. This is a fundamental rule of